Hi, Chris Duff over at Serious Land Capital, vacant land funding partner. Today, I wanted to go over an example of how not to land invest here. FYI, this is not a deal that we did. It came up as a comp when I was on Alicia Jarrett's kind of deal funding club that she runs bi-weekly with her clients on Tuesday afternoons. If you're interested, it's, I think, worth checking out. It's got myself, Brad DeGraw, Mason, and Dan Havercoast, a few other funders, and basically take a look at deals and work through whether they're possibly fundable or not. Similar to how I do the Lend Daily Diligence, split between some other funders. So I try to go a little bit quicker, but, some additional exposure to live deal reviews if interested. You'd have to reach out to Alicia about that though. So I'm laughing because of how this is just, it's such a bad deal. What happened here? And I obviously don't know the full story, but I can kind of peel back enough layers because we've seen enough similar to understand what happened here. So I know I'm kind of burying the lead, but just to position where we are here, this is in Washington State, north of Seattle, high demand county on average here, a lot of juiced up values from price per acre perspective. And this particular investor was looking at 12, 13-ish acre parcel. It had a little bit of questionable access. It had to have an easement off the road. But otherwise, it had some clearing. There was some potential there. It was an active market. And they noticed that there was a roughly 19 acre, almost 20 acre lot that had sold less than a year ago for almost $400,000. So then they were trying to reverse engineer. Okay, this parcel that they're looking at, the road access isn't as good, but there could be something here, and there were plenty of other largish parcels that were moving on the market too. So thought there was an opportunity. However, upon closer look, is that parcel that was sold under a year ago is actually active on the market still too. So peeling back the curtain, I have it open here. It's just there's so many lessons about how bad this deal is. I'm going to try to, I could probably do a whole podcast on each one, and I think I've spoken about some of these in different podcasts. So we'll do a little bit of rapid fire on why this one is so bad. First, it had sold for $350,000 in mid 2021. So super hot land market. As you guys know, I comment routinely that parcels that have sold within the last 5 years, you have to be very careful about purchasing. And that's a rough guideline, 5 years-ish. The more recent a transaction, the more risky it is. And especially like post-COVID run-up of prices, because we know late 2020 through mid 2022 is like a really hot land market, inflated prices, big sellers market across most of the country. So that's already a warning sign here, is that, okay, somebody sold this parcel for this amount of money, kind of setting a market in a boom time. And then it was listed active. I have no idea whether this was attempted to be a flip or not, or maybe the owner just changed what they were planning to do. And this is just, it's a raw piece of land, decent road frontage, really nothing else to it, a little bit of clearing, but it's not really, turnkey setup for any residential. It's just in a nicer part of the country. So then roughly 2 years later, so we're in late 2023, it was listed active for $650,000. So, okay, wow, could they really move this thing for such a huge run up? Again, this is when the land market had already turned a bit, when it turned back into a buyer's market. And probably not going to be able to get that much appreciation almost anywhere in the country within the last 5 years of trying to move another property so quickly without doing any significant value add or forced appreciation from a subdivide, anything like that. And then they changed the price to dollars in December. It was listed in October 2023, and then 2 months later, a near $300K drop in pricing from the seller. So, it's unclear why they did that. Maybe they just found, I guess they were figuring out, hey, there wasn't really a market here, significantly misjudged it. And they had bought it again for $350,000 in mid 2021. Maybe they're like, yeah, I just need to exit, get my money out. Who knows what their situation was? Feeling a bit more motivated. And then a month later, in January 2024 now, this is almost a year ago as of this recording, it went pending and then sold for that list price, that $377,000. And this is confirmed in Land ID and the official records. It was actually fully closed out at that price. And okay, so we'll go to a couple of these lessons here. Again, I'm just chuckling. So I feel this guy's pain, what he was trying to do here. And it's a little unclear what the intention was. My understanding is, looking at the current listing as it is now, they got a well permit and a septic permit in place. I'm not sure if they were in place prior to when this most recent person purchased it, but the property went live again on the MLS less than 4 months later. So this is now July of 2024. It was listed for $424,000. So, roughly a $50K bump on what this person just bought it for, which already is just like, that is a super tight spread, especially when you're not wholesaling it. You already bought the property, have title outright, spent almost $400,000 cash. And it looks like title transfer too. So it's possible there was some seller financing going on there, and title had already transferred into the financee's name. I don't think that is the case. I didn't check close enough for the official records. So they could have de-risked themselves a little bit, but let's just assume worst case scenarios that they laid out nearly $400K to buy this property and then was then trying to flip it, doing a little bit of value add for some permits for about a $50K bump on what they bought it for. And you have to account for all the closing costs on both sides. They're listing it on MLS. They're going to have to pay realtor commission, at least 6%, which I'm going to do the rough math here. 424 times 0.94. So all of a sudden, net of commission, they might be walking away with just under $400,000. So, all of a sudden you're only looking at like a $20K net return on your investment, probably a little bit less, including closing costs. Like the margin is like makes me start to sweat, thinking about how crazy this thinking was in terms of trying to offload this property again, and thinking that they could get enough margin on this deal and not trying to do a double close. And it clearly wasn't moving at that $424,000. So they changed the price now to $399,000 as of late November of last year. And it hasn't moved. It has some activity. It's not like terrible activity, but obviously they haven't gotten a taker considering it's mid-March. So 1, 2, 3, almost 4 months after that other price change. And now it's starting to approach, how many days on market? Yeah, almost 250 days on market. Bad sign, really bad sign. So that's kind of the status of this property. And now to reverse engineer it a little bit, why you can't rely on a comp like this, because it looks like this was a shorter term investor. We get sent some of these active listings all the time where it's like, hey, there's this active listing here. Seller's willing to take, half of what they have it listed for. To me, that's a bad sign. That means that the seller hasn't gotten any other even lowball offers. They're just trying to move on from this property. Obviously, they would have taken a higher offer if it was on the table. And I remark on this a lot more thoroughly in other podcasts. I'm just running through what I think this investor was thinking about. He's like, hey, this property was listed for $650,000. They cut it almost in half. Wow, what a steal. They must be motivated. I'm going to go ahead and buy that and then try to get a quick exit, maybe juice my margin a little bit more, do a little bit of value add on it, walk away with, 20 plus grand, wipe my hands of that, move on to the next one. I've got a hot area and go from there. That was probably their thinking, but it's just not that simple, especially when you have such narrow margin there. And the problem is when you buy an active property like that and then, immediately relist it, and especially if you're not doing like really significant value added, like clearing or subdividing, turnkey home site, but just a couple permits, like seeing that, even unsophisticated buyer on Zillow or Redfin, especially buying agents, they'll be able to see the recent listing history, and they'll see, wow, this, and this is a disclosure state too. You can't even hide the sales price. So they'll see, okay, this thing just moved less than a year ago for, a little less than 1,000, and now they want to list it again, and they cut the price. Like, what's wrong with this property? Why is this new owner trying to move on from it? You start thinking, is this a lemon here on the property? Like, you have to put yourself in the buyer psychology of what a recent relist looks like from the perspective of what your end buyers are like. That's why I say, like, it's really, really risky to buy things on market and then just, without doing significant value, try to relist or, maybe decrease margin a little bit like that. I've played that game before. It is hard to win. I avoid it whenever possible, but I'm almost positive that's what happened in this case. And the reason we can't use this property as a comp reliably for the other property that was like kind of across the street is that the investor who bought this property, could have been the only buyer who was willing to come in at that $380,000 piece, because he thought he was getting a good deal and could get some margin on it, but clearly, and I'm saying key too, because I know, looking at the seller's name, it's indicated that. So, just to make that clear, but, he's clearly not getting offers for anywhere near that 400, anywhere where it seems he could even break even on this deal. So we can't reliably use that previous sales price from under a year ago, because this was kind of like a greater fool situation. This investor fooled himself and tried to set the market for other investors can't utilize a fool's purchase to consider in a comping situation, because they're not a real market for the property, for property in that area. Now, it's possible, you could find another fool to take yours, but that is that's a fool's game, if anything. So that's why you have to be very careful about looking at the history of a listing and understanding, can this property actually be considered a real comp or not, and what actually happened with it. And that's the thing too, when you look at the price per acre, they bought it at like, 19,000 per acre. Everything else in the area, maybe a little bit smaller, was going like for 30, 40, maybe even 50,000 an acre, a bit more superior in terms of characteristics. We're like, oh yeah, I'm getting this at a big discount here. But in reality, that specific micro market was just not as attractive as some of those other properties. And so it just ended up being a terrible situation for this investor who, just laid out 400 grand to try to, earn 20. Just a terrible trade in this market. Like, I cannot imagine this guy sleeping well at night. And I haven't been in a situation this bad, but I've been in situations where, when dispo is going wrong, that is the most stressful part of land investing business. When you really screwed up a purchase, especially a high price point like this one. So I totally feel this guy's pain. But man, this is probably just one of the best examples of how, again, not to invest in land. He's just made every mistake in the book. Maybe he'll survive for the next one, maybe he won't. But, again, good lesson for how easy it is to get turned upside down in this business. Land is a risky game. Don't let anybody tell you otherwise. Look at how much churn is in this industry. People come and go every week. It takes dedication and focus to succeed for even a year, let alone 5, 10 years or decades beyond that. So let this be a lesson to you all. With that, seriousland.capital for any of your funding needs. Landpricer.ai. We actually got, I know you guys maybe listened to that podcast yesterday, had a more difficult conversation with the team. We're back online. I'll give you an update soon about that. But Landpricer.ai beta test should be coming out early next week. And Land Daily Diligence Facebook group for zero cost review of your land deals. We're going to be live again tomorrow. With that, take care. Bye.